Alright folks, so it's been a while since that huge Bitcoin crash that happened in May of 2021, and that gives us some time to calm down and really dissect what happened. Because there were a ton of hot takes floating around before, and honestly, many of them were flat out wrong after further analysis. Like blaming Elon Musk, for example. And while his tweets definitely did not help, I don't think it's fair at all for him to shoulder most of that blame. In fact, I've identified 3 other factors that were already brewing behind the scenes before that crash even happened. And if it wasn't for Elon, it could have been something else, anything else really, that kicked it off. So in this video, let's dive into really understand what happened and how we can be on the lookout for these clues in the future before the next huge correction comes. So if that sounds interesting or useful to you at all, then strap in my friend and let's dive right in. Either die a hero or you live long enough to see yourself become the villain. That quote from Harvey Dent in the Batman movie really resonates with me here, especially when it comes to Elon Musk. Remember, Elon was a longtime darling of the crypto world. He would tweet out support and funny memes about Bitcoin and Dogecoin in the past few years. And he even got Tesla to convert $1.5 billion worth of their cash to Bitcoin in February. Everyone loved him and would comment on his tweets with words of praise. But on May 12th, he announced Tesla would no longer be accepting Bitcoin for purchases because of environmental concern. That caused a huge immediate drop of around $3,000 for Bitcoin. Before then, Bitcoin was ranging sideways at around the $50,000 to $60,000 range for several weeks. But after Elon's tweet, it started falling more and more, culminating in a huge 15% crash in the early hours of May 19th, where we saw Bitcoin wick all the way down to around $30,000. Remember, we've seen Elon's tweets single-handedly move markets in the past. So people said his tweets was the domino that kicked off that 45% correction over the span of a week. It was really quite intense how quickly people turned on him. I saw people telling him to shut up and stop tweeting, and other people said that they're going to sell their Tesla stock or cancel their Cybertruck orders to get back at him. But was this really his fault though? I was never really comfortable with that explanation because it seemed too simplistic. And when I dug further, I found 3 things that were already happening in the background and had nothing to do with Elon. And in my opinion, they better explained why this massive crash happened in the first place. The first one is that big players were starting to sell. Just look at this chart I grabbed from Glassnode, and when you see the line turn green instead of red, that's when there's more coins flowing into exchanges rather than out of them. And generally speaking, that means people are sending coins to exchanges to be sold. It was actually late April when this trend started, and it intensified for several weeks, culminating with over 6,000 Bitcoin being sent to exchanges on that fateful day of May 19th. And at that time, it was a mind-boggling $222 million worth of Bitcoin going to exchanges to be dumped. But that doesn't answer the question of who was selling. Fortunately, we can look at the blockchain to find out because it's an open ledger. So there's a lot of useful data that we can extract from there. From this Glassnode chart, it's a little bit hard to see, but each of those 3 colored lines represent the amount of Bitcoin held by larger addresses. And you can see that they've all been falling for several months, which means that whales who used to be stacking sats switched to selling. And if you look at this chart, we saw that the amount of Bitcoin held by smaller addresses actually increased during that same time span. So what should we take from this, right? It means that whales were selling and guppies like you and I were buying. But the issue is us guppies aren't enough to soak up the 100,000 plus Bitcoin that was dumped onto the market during that period. So it makes sense that the price would drop because of this. And it's not only whales, miners are also selling more than usual. I mean, of course, miners need to sell some of their Bitcoin so they can pay their electricity bills, but they can also choose to hold more of their coins or sell more depending on their own sentiment. A firm called Bytetree was closely monitoring miner wallets, and they noticed that miners were spending more Bitcoin than they were earning from block rewards. This means that they were hodling before, but they started to move Bitcoin out of their wallets at a faster pace. You can see that in this graph right here, where the green line representing miners' spends overtakes the yellow line, which represents the Bitcoin they generate. And that happened at around May 14th, several days before that big crash. So miners and whales were both being super tofu-handed, which is our way of saying paper-handed. Now, the second potential cause of the crash is more from the technical analysis world. This is where you look at price action and indicators and deduce what might happen next based on hints that we see in the charts. You might have seen the phrase weak market structure being thrown around, like in this tweet here, or this one, and here's another one for you. Some traders were already saying that they didn't like what they saw in the charts as of early May. Bitcoin was printing lower lows and lower highs and was, quote, dangling onto support. That may all sound like an alien language to you, but basically it means that Bitcoin was trading in a way that reflected the overall hesitation of the market. And the market was already losing steam, right? So when that's the case, any FUD event that comes out, no matter how big or small, could push it over the edge. Or we could have just had a correction regardless. Sometimes we see those happen and it leaves us scratching our heads like, what the heck caused it, since there wasn't any news that we could find? Point is, the market was already showing weakness way before Elon even started tweeting critical things about Bitcoin. But even with whales selling and a weak market structure, I think we're missing the biggest cause of the crash: some true manipulation and coordinated attacks. Before I get to that though, I want to give a quick shout out to Atani, also our sponsors for this video. They are an all-in-one crypto trading terminal that I personally use, and it aggregates all your major exchanges in one place, so you can easily trade on all of them in a hassle-free and secure manner. Basically, you just create exchange API keys and plug that into Atani. And one enormous benefit is that in times of market crashes, like the one we're talking about, the vast majority of users cannot access exchanges like Binance, Coinbase, they were all down. But with Atani, you can access them since you're using APIs and not their front-end website. So that's a huge benefit for us because we can scoop coins at the lowest point and not wait for it to come back up before we get access again. So go try them out, go download them. It's completely free. They're backed by VCs. Use my link down below if you're curious. All right, so here's what I see as the #1 biggest driver of the crash. And it's something I call leverage plus sharks. First, people were using leverage up the wazoo, right? Just look at this chart. All those green bars represent high positive funding rates, which means that traders were super bullish and wanted to go long. People were getting really greedy, wanting faster gains than just holding their coins. And on top of that, exchanges were offering a ridiculous 100x leverage, so the whole situation was a powder keg waiting to explode. Because that lets us get gains much faster with high leverage, but if price moves against us just a tiny bit, we get liquidated and lose all our money. So here's where the sharks come in. And these are just market movers who kind of operate behind the scenes, who notice this whole situation building up. So this is a little bit conspiracy-esque, but this guy on Twitter called 2Popper wrote a long thread sharing how he used to help large clients pretty much do manipulation and FUD as a service, so they can crash the price of Bitcoin and get in at a more favorable rate. He would do a lot of things like pay for exposure from media outlets and pay influencers to get them to share negative news in strategic moments. And they'd also have a lot of Bitcoin that they would dump straight up on exchanges, so bots would start to sell and retail newbies would be super scared from all the negative news and they'd sell too. Now here's where it gets interesting when you add a lot of leverage positions to the mix. Because remember, if you have a leveraged long position open and the price drops too much, then the exchange will sell your coins on the open market. So what that does is that it creates even more selling pressure, which drops the price, liquidates more longs, and on, in which they call cascading liquidations. That's why we saw that huge wick down in the span of 1 hour. And that effectively cleared all the leverage out of the system. To put that in perspective, that was over 750,000 accounts liquidated, which amount to over $8 billion worth of positions. That's freaking crazy, and that's why I don't use leverage, ladies and gentlemen. But you might be wondering, like, Kevin, how can we know for sure that it's manipulation going on? Well, we can't know for sure, but it sure smells like it. We saw that recycled China FUD from 2017 come out in force, and we even saw a huge amount of Bitcoin getting sent to exchanges right before Elon's announcement. Is that all just a coincidence? Maybe, but I personally doubt it because there's not a lot of oversight or regulations for the Bitcoin markets, right? It's just too easy and open for manipulation, so you know big players are gonna take advantage of it if they're able to. Now, this is super important here because we now know it wasn't that Doge-loving billionaire who caused this correction. It was a mix of whale selling, market weakness, and massive amounts of leverage that was really easily manipulated. But what can we do to avoid being blindsided like this in the future? Because this correction probably caught you off guard and did for most of us actually. My solution is simple. It's just don't only follow those moon boys that feed you hopium. As much as you and I are bullish long term, we gotta be realistic. It's not always price go up. Fortunately, there were several analysts and traders who were already pointing out the early warning signs beforehand. I'd say go follow them for a healthy, different perspective. That, or go learn on-chain analysis and chart trading for yourself so you don't have to rely on other people. Now, even with this huge crash that we haven't fully recovered from, I do not think that we're in a bear market. And for my strongest case why, you should watch this video here that I made before, or watch this one about the most common Bitcoin FUD so you'll know what to ignore in the future. I'm Kevin from BFB. I hope you enjoyed this one, and I'll see you on the next one.